Now that you have your indicators loaded up on the chart, I'm going to show you exactly how to trade the RSI Golden Cross strategy, and more importantly, how you can refine the strategy so that you drastically reduce your risk and increase your potential for profits. So have a look at the chart and let's consider the following. If you take a look at the exponential moving averages, the entire system is derived off of a cross between the 50 and the 200. In this instance, mine is red, that's the 50, the 200 is blue, and you're looking for the red to cross back above the blue. You'll notice that when this happens, price moves aggressively towards the upside, and that's quite an extended move. That's then followed up by a major pullback, and ultimately this is where you'd be looking to time your entry. So I'm going to show you exactly how this works. Let's first have a look at the slides over here. Now, if you have a look at the slide over here, these are results with unrefined systems in place. I'll show you what I mean by the refined systems. Ultimately, it resulted in a failed signal, profitable signal, a failed signal, and 2 profitable signals. But you can drastically reduce your risk of any failed signal if you use this one simple step. And the step is as follows. Going back onto the chart over here, you want to work out historically how far does price push up and how far does it typically pull back before the next major move. And using every single iteration or result, we're able to deduce some valuable data which we can use. And this is the data set. So if you have a look at this slide over here, it says on the top, timing your golden cross entry. Every golden cross is met with an overextended move. You don't want to chase the pump. You want to wait for a pullback. Using the historical data, you can see that on average, price will move more than 26.5% above the exponential moving averages at the point of the golden cross, meaning that price is 26.5% above that exact cross. That's followed by a mean reversion play. Usually when price overextends from an exponential moving average, it's just a matter of time before it pulls back into that. And this is typical of what you've learned with me throughout this course. When you see crosses between moving averages or exponential moving averages, they tend to act like a magnet, gravitating price back towards them. How far is that gravity? Well, the gravitational pull is usually on average 12%. It brings price back 12%, which means anytime that you see one of these golden crosses on the daily time frame, you want to be looking for at least a 12% pullback before gaining or timing your entry into the chart. So if you consider this example over here, and I'm going to bring out the ruler once again, price moves from bottom all the way to top 23.81%. So all in line with everything I just showed you. Once that top is set in, price then pulls back how far? Around 12%. As you can see over here, it's 13%. Now what you would need to do is you would look to time your entry around that 12% pullback. So to do that, you would zoom in on a lower time frame and look for an entry signal. Again, we will cover more on how to enter trade and looking for entry signals on a low time frame in a future lesson. The point of this though is that you're looking to buy the pullback and make sure that price remains above the 50 and the 200 exponential moving average. So if you zoom out and you look at what happens next, you can see over here, price then continued to rally up 641%. And this is how you get into these trend trades. Now you can have an added level of confidence when you look at what happens with the RSI. If you see the golden cross take place while simultaneously the RSI crosses above the 85 mark, then you have added confidence that it's probably going to be an extended move, because every time that this happens, the RSI will print at least 2 more readings above that 85 mark. And what is the RSI? The relative strength index, meaning that it supports the notion that you're going to have an extended trending move. So your next step is to go onto the RSI, mark off using a vertical line exactly where the 85 mark is, and pay attention when that golden cross takes place. Anytime in the recent vicinity of the golden cross, you should see a daily closing RSI above 85. If you have the presence of that signal, you can bet your best dollar that you're probably going to have continuation of an extended move. If we look at the current price action right now for Bitcoin, what have we got over here? We have the presence of a golden cross. We have the start of a trending move. We only have one RSI daily close above the 85 mark, which using this strategy means that you're probably going to get at least two more, which suggests continuation and further upside. So this will help you as a longer term trader or an investor to stay in the market with confidence and understand when you should be risk on. So let's have a look at some of the historical results when you combine that RSI into the golden cross strategy. If we look at the slide over here, you can see this is what happened when the RSI was above 85 in the presence of a golden cross. There were pretty much no losses. Every single one resulted in profit, on average looking at about a 315% upside move. So if you have a look at the charts over here, this is an example of the very first one where we had the golden cross with the RSI above 85. As you can see, it printed 1, 2, 3, 4, 5 times before the move finally finished. So remember, it can be more than 3, but it's a minimum of 3 prints after you have your first daily close above 85. Here's the second example from 2015. Prints above 85, golden cross has taken place, strong trending move and continuation. 2 more daily closes occur above the 85 mark and it's trend continuation. Here's your 2017 one. First one above, golden cross takes place and trend continuation. You get another RSI print, another RSI, and another one above 85, trend continuation. And then you can have a look at this one over here. This was the last run that we had in 2021, which I just showed you on the live chart. And currently we're waiting for the next one to play out as well. So that brings us to the end of the lesson for the moving averages and exponential moving average strategies. As a reminder, these strategies are in place to help you to better identify the trend and to have key levels to enter as well as to exit your trades. And this can be applied across multiple different time frames. It helps you to gauge that overall momentum of the trend. And remember, the moving averages and EMAs also can be used as levels of support or resistance depending on which way the trend is moving. So in the next video, I'm going to be covering market cycles and more specifically how technical analysis can be used whilst assessing those market cycles. I'll see you all there.